Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Tim McCourt. He's the Global Head of Equity and Foreign Exchange Products over at CME Group. Tim, it's great to have you with us. Welcome to Trade Talks.
Yeah, good to be here, Jill.
And
thank you.
You launched your latest tranche of EMini sector futures last month. Tell us more about that.
Yeah, so as a constant theme that we've been talking about the last few years is index choice matters. And certainly what we've seen over the last few years when looking at things such as the financial, the energy, and the technology sector is that clients generally can benefit from the more precise, more granular risk management and exposure that some of these sector indices are providing alongside the major equity index benchmarks such as the Nasdaq, S&P, and Russell. There's really been an upwelling of demand for more sector-specific exposure and access to the market. So as we always say, you just got to listen to the crowd sometimes and give them what they want. And really happy to roll out 6 new EMini sector products at CME.
Let's talk specifically on Nasdaq's Semiconductor Index.
Yeah, it's a great index, right? It's something that's been around a long time. It's a bellwether and a leading index for the technology sector across the markets. And when we look at the last few years, we've seen undulations in demand for things like semiconductor products, chip manufacturing. You know, we've gone from a boom and over demand at the beginning of the pandemic to now what we're hearing some people talk about possibly is demand waning in the chip sector. So that price exposure and that risk has manifested in very different ways. And as such, clients want more and more precise risk management tools to access the semiconductor space. And looking at what the SOX does with respect to not only the index, but the ecosystem, it's got great ETF products out there. It's a leading benchmark for the industry. It makes natural sense. It's a great time to introduce futures to further complement all their risk management capabilities of clients in the market.
And that leads me to the next question. What are the advantages of sector futures versus using an ETF?
That's a great question. So just like all other futures at CME for equity index products, there's certain benefits, whether it's the 24-hour access to liquidity, the capital efficiency, the margin offset. And then when you're looking specifically at some of the ETF or cash products, these are Section 1256 contracts. So just like the broad-based index products, they could benefit from the blended capital gains treatment, long-term, short-term, et cetera. So all those other benefits you enjoy on things like the EMini Nasdaq 100, you can now enjoy those benefits when trading the SOX futures at CME.
And let's also talk about the difference with equity trading tools versus using the SOX sector futures to hedge in the semi space. What are the differences there?
I think it's something that, you know, specifically for this, when we look at the global demand for the semiconductor space and the different type of risk that manifests, whether it's in the overnight hours in the U.S. sector during the regular trading hours in the U.S., you know, ETFs and single stocks are not always available for customers. So I think certainly the 24-hour price discovery and risk transfer process is one that is important. And then you look at how you can trade that versus other sectors at CME. That combined liquidity of sectors is really important. Where broadly speaking, sectors we're trading 20, 30,000 contracts per day. It's seen almost 60% growth over the last 2 years. So as you're looking at all of your sector diversification, and now adding the semiconductor as well as all the other new sector products to the existing 11 sectors that we already offer is a very powerful combination, and having them all trade at CME is a distinct advantage for the marketplace.
How do DriveBlocks fit into the strategy?
DriveBlocks is something that we've been working with customers for several years, and we're very pleased to introduce it, where it's a new block trade functionality where you can actually agree to the basis of a future versus the index. Your dealer can effectively work the hedge, whether it's a multi-hour VWAP or a percentage of volume. So some of these swap-like or upstairs style of execution that customers have enjoyed in the dealer to customer space, they can now do that in futures. So it's a highly innovative transactional handshake that we've introduced. Very excited about it. And it's a way to get great liquidity provision in some of these smaller sectors where you're not able to get your full size done just on the screen. And that's just come to market this summer. I'm very excited about how that's going so far.
Have not heard their term trading upstairs in quite some time. Thank you for that flashback. What about volume trends?
You know, volume's been great. So when we look at sectors, like I said, they're continuing to increase year over year. This year, the sector futures are up about 20%. And when we look at kind of the last few years back to 2019, up almost 60%. Open interest is growing strong. We're over 200,000 contracts many days in terms of open interest across all the sectors. When we look at the new sectors, you know, building new markets is always a challenge, but we're seeing great market quality in all the products that we've launched. Still early days and great feedback from customers. More broadly, you know, we're still seeing a banner year at CME for our equity index products. Very strong August growth, up over 50% year over year. And that's something that we see continuing. Not quite as high that we saw in the early part of this year, but certainly above average for August. And as we head into the last month here in Q3, it'll be exciting to watch.
Let me ask you about event contracts. What are they, and why is CME Group choosing to introduce them now?
Event contracts are a new product that we'll be introducing on September 19th at CME Group. And what they are is they're a smaller sized contract that is a fixed payout of $20 per contract. And it's a known price when you're getting into it. So it's designed for an individual retail trader. It's designed for market enthusiasts who want access to all the benchmark products that we have at CME. We'll be introducing it on 10 of our futures contracts. And what it is, it's a daily expiring contract that you're effectively saying, will this close higher today or will this close above this price? Yes or no. So it's a very easy, user-friendly way to get involved in markets and attract new users to CME.
What are the benefits that these could potentially bring to trading?
I think the benefits that they could bring to trading are that they're based on some of the most well-known benchmark products out there for financial markets. When we look at the 10 contracts we're introducing across equity, metals, energy, and our foreign exchange contracts, these are already known and familiar benchmarks that are referenced to whether it's the media, whether it's academics, whether it's in your retail accounts with your brokers. These are all well-known products, but now it's a more approachable product if you want to get involved in these markets. You might be a first-time user to the futures market, and this is just an easy, straightforward way to express a daily view on where you think these markets are heading.
That is so interesting. And these will be available to trade on September 19th?
That's correct. September 19th, through your futures account, through your broker. These are futures-based products, so all the kind of normal futures rules apply when accessing these products.
All right, Tim, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.